Good morning, everybody. Happy Friday, TGIF. Today is Friday, December 7th, 2018. My name is Philip. I am, it's a market open. It's 7:30 a.m. in Arizona, so that's 9 a.m. Eastern, or 9:37 Eastern time. So the market's open at 9:30. Got a nice glass of hot tea. Now this is what we did. The market just opened. This is what we did. We already have some buy stops here. Buy stop. You can see that it's 2% of our account equity. This is a paper trading account on Tradingview. Just for a disclaimer, I started with 10,000. I lost it down to 6,500 just yesterday in one day. After taking indicators off of my chart, all of a sudden I started making money. Imagine that. So we're back up to over 10,000 in one day. Just by taking off the indicators. When you try to trade with indicators, you're trying to match what you think is going to happen based on this indicator. And the market doesn't move, excuse me, anything in relation to what this illustrates. It doesn't do anything to what this illustrates. All this stuff does, every indicator that you can put down here is derived from this information. Specifically the difference in price. So I had already had an order. We figured this had happened yesterday. So this is the way I analyze the chart. I start off with long term, which is for me a 4-hour chart. You can see, on a quick glance here, we can go all the way back to July, midsummer. So that's half year that we're looking at of data. Okay, it went up there to its high, and then it crashed back down, past all three trend lines. Back up, back down, back up, back down, and this came back down really fast. We expect a slow, steady trend back up here, just like it did on this one, just like it did on this one, and that's what we look down here for these areas. There's a lot of buyers at this level, a lot of buyers at this level, and we would assume a lot of buyers at this level. So this is the long term that we get. Now these trend lines, the way that I use this is I took Bill Williams' Trading Chaos, and I tweaked it, to that's what everybody does in trading, right? You find something that relates to you, something that's personal to you. You tweak it, you make it your own, and you trade with it, right? So we did the alligator, but we didn't use the time frames that Bill Williams suggested. I have a 89 weekly moving average here, SMA, it's a simple moving average. I have a daily 89 daily SMA moving average, and I have a 2-hour, it's 120 minute 89 SMA moving average. On a 4-hour chart, this tends to match with the fractals. That's all I realized, that we can make some money without using these indicators. These are here for backup. If you need them, double click on the screen of your Tradingview chart, and then you're right back to where you need to be. So that's the idea to get our trade basis. We want to be with the trend, long-term trend. It's down here, short-term. It came down really fast. A lot of selling pressure. We're down into a buying area, so we would expect this to rise back up. So zooming into our 5-minute chart, what we're going to look for is reasons to get long, reasons to buy. So here's the market open. Okay, here's those trend lines. Okay, I colored them purple when price is below them. They're yellow when price is above them. And of course, down days are purple, up days are yellow. You can see we had this purple day sell-off, gap open, made some money on that, and made money on this downtrend, made money on up yesterday. So what we're doing is we're doing breakout trading with these fractals, and we're just going with the market. And the first thing we do is we reduce risk. So we take our stop loss and we move it up as far as we can. Each and every time the market wants to go further, we let it go further, and we adjust our stop loss right below it. Okay, keep going, market. It's gonna open up today, and we expect it to get back up there, up here in this range today. So that's what we're expecting. And we just made a profit. That just took out our last trade. We'll go up here and here it is on just now. Today we made plus 309. Okay, so our count's now up to 10.8. Okay, and what we do is we'll move this buy stop down to the high of that bar. Okay, so we got them in order, and that's what we want to do. We want to move this one down because that's the next one in line. We got them prepared, so about right there, and we want to put a stop loss in. Let's say below this bar right here. That's a 2701. 2701 point. Here we want to put 2% risk on each trade. I don't use a take profit because I move my stop loss order up. Okay, just a second here. So this is the one we adjusted, and it's 2%. We wanted 2% of our account is going to be 27 shares. That's the risk between here and here. I put this yellow line on here as my expectation. A little up, down, up, down, up, down before it jumps up. Okay, and you can see the market right now just went up, and it's forming another 26 seconds until this bar is closed. And it might be an evening star up here out of the gate. But again, first thing in the morning, there it is. We were prepared with our buy stop and sell stops. We projected up day today, and the reason was we had a down day yesterday, rebound today, we filled in the gap yesterday, and today we might continue on back up this trend. It may come back down, we don't know, but we're prepared. We'll set a stop down here, and then a sell stop, and then move it up incrementally so that we can be prepared when that moves down. Okay, right now our trade basis is up, so that's why we don't have any sell stops on here. But if the market was to turn around real quick, we can just as easily put a sell stop order in, right? So that's what we got going on right now, and continue watching for further updates. Thank you all. Good luck to your trading. Have a great day and a great weekend.